Welcome to this video. It's Friday. It is the 9th of March. Just going to talk about USD in general terms. Just really want to go through a couple of topics about the USD that are heavily discussed in the media at the moment. The first is that the US dollar will be hurt if trade wars escalate. And the second topic that follows on from that is the USD is losing its status as the global reserve currency. And you've got the market very, very bearish of the USD at present. Now, there's absolutely no chance in the short term of it losing its status as the global reserve currency. I'll explain why in a moment. Also, trade wars are actually positive for the USD because they create risk off, and the US is a safe haven behind the Japanese yen. And that is true. A lot of people in the market are saying it's not. It is. I'll go through some points in relation to this at the moment. Now, the USD second safe haven, as Jim Rogers said recently, it shouldn't be, but it is. Okay. Now, in terms of the USD, it's at a bearish extreme now. And when you get a bearish extreme, you start seeing the media go over the top and try and justify why it should go down. This happened with the yen back at the turn of the year. We were saying, everyone sees the yen going down. And a lot of evidence that they did present in relation to this just didn't add up. It doesn't add up with the US dollar either. USD, in our view, seen its lows of the year. It's now hammering out a base in our view, and it will go significantly higher. I'd expect the USD to move into an uptrend within a few weeks. It could happen at any time. It won't be a small uptrend either in our view. The yen has had a fantastic move to the upside. USD, same is going to happen. Now, I'm just going to go through my logic of why I think the USD will firm up, why trade wars won't hurt it, and why it isn't going to lose its status as the global reserve currency anytime soon. So let's just look at a quick storyboard and go through the points. And in relation to the USD, we'll be loading up some videos shortly on long-term opportunities in it. Right, let's go through the points and see why the dollar could be on the verge of a major trend change, in our view, of course. Right, let's have a look at the USD generally and some points to consider in terms of it being the global reserve currency, and also in terms of what will happen to the USD if we move to risk off, and where the USD generally is right now. Now, in terms of in the media, when it says, the USD is going to be no longer the global reserve currency, that is just not going to happen. Okay, let's take the global GDP first of all, because this is very interesting when you look at the currency data. Okay, US is only 18% of global GDP. Okay, its percentage has been shrinking since World War II. I think it was 33% in 1945. China is the next biggest economy at 15%, although that figure is slightly inflated. We know that Chinese data is not so reliable, but that, in the big picture, it doesn't matter. Emerging markets account for about 60% of GDP globally. Okay, so in GDP global terms, US under 20%. But look how it dominates the currency markets. Over 60% of all countries, that's accounting for more than 70% of world GDP, use the USD as anchor currency. Proportion of trade invoiced in US dollars is similar, so around 70%, and 40% of the world's debt is issued in dollars. Actually might be slightly higher than that, because took that 40% from data a few years back, but you can see how important the US dollar is in terms of the currency markets and transactions. And one point that you don't see very often in the media is how foreign banks will lend against the USD base, particularly into emerging markets. So you can see here, 2017 banks in Japan, Germany, France, and the United Kingdom held more liabilities in USDs than in their own currencies. So you've got a really dominant currency. Also, an interesting fact is 65% of dollar bills used in the world are not used in America, they're used overseas. I'm sure a lot of people who deal overseas will know a lot of countries, people like to be paid in US dollars. I deal a lot in Russia. They don't want to be paid in rubles. They want USD. Okay. Now, can it lose its reserve status? Well, it could if there was an alternative. No alternative, is there? Euro was put up a good few years ago as being the alternative. That hasn't happened. Now it's going to be the Chinese one. That isn't going to happen at all. China's got terrible problems, and we think it's going to have a hard landing. But that aside, it's not even a free-floating currency, really, is it? I mean, it's pretty state-controlled, to put it mildly. But the media gets excited about this sort of stuff, like, for example, the Chinese are going to get a contract together pricing oil in yuan. Well, let's see if that works. No one's going to use it because it's a manipulated currency. So there is no viable alternative. And back in 2009, China, Russia, and a few others saying, we need an alternative. Okay, we're now in 2017. That's 8 years later. Nothing has happened. Okay, so the USD is the global reserve currency by default. It's like Jim Rogers said, maybe it shouldn't be, but it is, and that's a fact. It won't be changing. Of course, it could change, but it's going to take decades. So that's just media hype. And for me, goes with this general view that the dollar is just going to keep selling off. It won't, in our view. Let's go through some other points in relation to the USD. If we took it right now, it's generally oversold on current and projected interest rate differentials. Okay, now we had risk on generally for a good while, and the USD has been sold for higher yielding currencies. In the majors, you'd say the AUD was the proxy risk currency, but there's a huge amount of money in emerging markets. If you look at Mexican peso, Turkish lira, Polish zloty, they've all been doing quite well against the USD recently. Are those economies stronger than the USD? Of course they aren't. It's just a yield play. Okay, and currencies that have high interest rates, tend not to have great economies and are trying to attract funds in. That trade, you've got a lot of money parked in emerging markets. Is speculation. Okay, in risk on, low volatility, you can go for yield. That will change as US rates go up. Okay, and more importantly, if we get volatility, we had a little bit of volatility recently. That stock market moved down, dollar firmed up, but we're in a sort of dangerous time now because, in terms of central banks, they're taking liquidity out the market. Okay, and the USD, it's the global reserve currency. It's becoming more scarce generally. Okay, Fed taking dollars out of circulation, but on the other side, they're also raising rates. Okay, risk off volatility in markets is a danger to emerging market debt. Okay, there's trillions of dollars of emerging market debt. Okay, interest rates are low. That's okay, but when they rise, it becomes more expensive. Obviously, if the USD rises, it becomes even more expensive. Okay, now in terms of we know basically that the global economy is just so in debt. Emerging markets are the most vulnerable. Okay, if you start to see volatility, stronger USD, stock market turmoil, you'll start to see the emerging market debt have to be paid back, okay? It'll flow back to the books of the banks, okay? When we talk a lot about risk off, we say risk off, but yeah, what does actually happen in risk on is more dollars are lent in the global economy. Then when risk off comes, they flow back to the books of the banks, and then the banks don't lend out so many US dollars. That's involved as well. I think, if we're looking for a trigger for a financial crisis, it's emerging market debt. Because I just feel that it's so big. I can't remember how many hundreds of trillions it is. But it's all going to go badly wrong in our view. US bond market is the most liquid in the world. It attracts funds, okay, when people are looking for safe havens. JGBs in Japan, obviously, and obviously got European markets, but the US bond market is still biggest and most liquid. If you look back to 2008, when we had that turmoil, which currencies went up? USD and JPY. 2017 is going to be the same scenario in our view. Okay. Now, I don't see things continuing in terms of just like really risk on, And I saw, currency analyst projections on Reuters, 60, and they all agreed on what is going to be the top performing currency this year. Which one do you think it is? The Mexican peso. Well, if we continue with risk on, might happen. Okay. But market's very complacent at the moment. I just feel that, the USD where it is right now, has very little downside. Yeah, the market is talking it down and talking it down. It isn't really falling much. Okay. And going forward, for us, the big fundamentals are firmly in its favour. And I quite like the USD at the moment because, it doesn't really have any friends, okay? It's a bit like the JPY at the beginning of the year. It had no kind of mates, did it? Apart from a few people who thought it might go up. And that's very often what happens, when a currency is, everyone says it's bearish and it's not really going down. Bearish fundamentals for it peaked, it's probably going to go up. Happened with JPY, in our view, happened with the USD. And USD, even without risk off, just on the current way it's viewed and its long-term fundamentals, it's got more upside than downside from here, I think. I might be wrong, of course. Anyway, I hope you found that little summary useful. Thank you for watching me as per usual. Take care and have a good day.